Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's October 13th. This is going to wrap up our week for the week. No chart lesson tomorrow. I know this chart looks a little busy, so I'm going to explain some of this and then take it off so it's not so busy. Early on, we had this spike down, and then we kind of went into a channel. And in the end, I really thought this was a two-tiered channel. The lines still come into play, but we just reversed here, and generally you would expect after a break here we'd get a new low. Maybe this is just a spike and a tighter channel, and if you move this line right across those first few highs, you get a break here and a new low, and then it reverses. So maybe it is just a spike in channel, and I was misreading it, and we did get a break and a new low. But either way, it's really, in the end, this is a range day, and we had the move down to the lows, and then we had the move back to the tops. Notice early on we were in this real tight range going sideways here. And so once we drop lower, you measure that, and you look for about a measured move. And you can see if you move that to the bottom, that's about where we went to, and then it reversed. It actually went a little bit further. But once we started breaking higher up here, maybe this is a midline here, and this is the bigger channel, and so you measure that whole channel, and notice we got basically a perfect measured move again. So in the end, I believe this is a range day, but generally still within the range, you have these trends and trend lines. It looks like there's a two-tiered channel working its way back up. We ended up overshooting it up here. But really probably wise prices were shooting for this target of a range day more than they were this two-tiered channel. I believe if you found this darker blue channel, which you probably couldn't find it till almost lunchtime, late morning, you needed these first two swings here, and I guess that's around 11 o'clock. Excuse me, I'm sorry. That was around 11 o'clock, so you wouldn't have found this channel most likely until around 11 o'clock. And if you just drug it up here to the top after you got those two swings, it came into play. If you back out here, you can see there's two swings right there that you might have used and drug it down. You got to be really advanced to do that, though. I did have a video yesterday that's on the website you can look at that shows you how we do that. But it takes experience to be able to do that. So not everybody would be able to find that. But that's what I would do. I try to draw them across when you start to find. You definitely should have had this by the time it turns down here, because then you got three swings there. And of course, you got the two swings at the bottom, so you should have already had it. But if you found this darker blue one, that's all you needed in the afternoon. You can see that this other one, prices reacted to the midline several times. And then, of course, prices reacted to the upper side as well. It's swinging both sides of it. So they all came into play, but it's a little bit busy, so I'm going to back on out here. Probably won't look quite as busy when we back out, but I'm going to take some of these arrows off and stuff. And also, early on, I measured this leg right here and drug it down to here, and when we didn't get that, that's a good clue that we may rally. So that's another thing that led me later, by this time in the day when we're not going any lower, that hey, we're probably going to rally here at some point. So you could almost call this a reversal day, but based on all these measured moves and so forth, I believe it to be a range day. In the end, we just had this spike and channel down, and again, when I back out here, you can see this spike and channel a little bit better. Notice those swings, and then we finally get a break here to move to a new low, and it reverses. So that's probably correct, even though when you drag this line up, prices still react to it. Notice how they held on this side, and then when they push through, they pull back and test it. So maybe it is correct. Honestly, in the end, I like the spike and channel because the price action rules follow a little bit closer there. But people are watching that measured move, and so it's obvious there's some people because the line comes into play. If it wasn't, if this line wasn't here, it would have just shot straight on through, and it probably wouldn't have come back and tested it and all that good stuff. So anyway, I'm going to bring it down, and we'll assume this was a spike and channel here, and we'll play it like that. So if you draw any shorter term trend lines, it doesn't really matter anyway. You follow those. That's why I draw all these shorter term ones in here. And you can see there's 3 different levels working off this bottom. You got this real tiny 2. You may not be able to quite see that yet. And then you got the bigger 2, and then you got the even bigger one. And so you got to be able to realize that that's why price action works on any level, because there's something going on at every single level. But anyway, let's back out. Let's go through the trades and wrap it up here. I'm not going to be 30 minutes today. I need to get out of here today. So, but anyway, you get the spike and channel, and really we just start going sideways, and you're just looking at a trading range across here basically, and you can see that. And notice how we tested this a couple of times, but notice you got a channel working up, you get a close outside, so you're going to get a tempt at 2 legs, and it tries twice and fails at that same level, gives you a nice bearish bar. And this is just after 7 o'clock, so this is just a few minutes after I sit down. There's a perfect setup, easy to read, easy to see. This first setup here, if you were trading, you might have gotten tripped up right here. You can see that one, but that was at like 649. That's before I get in. So it would be tempting there, but you see that double top, and you want to make sure, and you see where that high is. So if you're going long, you got to have room to get in, and you wouldn't have. So that's enough reason to stay out of it if you were trading. But if you were like me and you weren't trading yet, and you come in and it's working up, and then suddenly you get this bearish bar, 2 tries to go higher, failed second entry long, go short right there. That's a perfect setup. It gives you a little lower high right here, but the bar is too neutral. It's a breakout pullback short, and it's a lower high off the top, but I don't like it. It's close to this original overnight, this original low. This is the ending overnight low, but this is where most of your support was coming across here. And that's where, notice how it acts as resistance there. So I don't like going short right there. It does give you a real tiny bar here. It's a much better entry than this, but this bar is not bullish enough. There is a possible close outside there. But when it tries to go lower 4 different times and gives you this bullish bar, I like going long right there. When it breaks above that bar, just go long. And we're looking for it to come back to the upper side. That's what you would expect. If there's another channel across here, then we may turn down right here, but it tries to get through there twice. You really could consider going short there, but we didn't have a new high in place, so you never know if it doesn't bounce and push up one more time, and we're not up here yet. And this could be a midline, so we may push on through. So I wasn't crazy about going short there. You could argue for it. I'll make it green. But I think you're better off to wait and see if you get the reversal pattern. And you do get it just a few bars later, and then you get a safe entry. Notice we push on down and we get below the EMA and we pull back and it fails. This is what I would call normally the safe entry. But the reason I don't have it marked is because look how we're going sideways there. And if you went short right there, that's the only thing that would keep you out of that, because that looks like a failed second entry long. It looks like your reversal pattern. It looks like the way to go. The problem is you still don't have a new high in here, and so this could be a trap. And lo and behold, that's what it turns out to be, is a trap. So when it turned back up, I actually like going long here. And the other clue is that we haven't got to these highs yet. So that's why I don't like going. When you start to see bars stacking up like that, you're taking a big risk entering on it. So even going long here, this probably should be green. And you probably wouldn't have caught this one anyway. Notice that gap right there. It gaps up and takes off. There's plenty of room to get out there. But you may not have been able to catch that one. And again, it's risky because we're in the middle of a trading range, and that's when you start to have your problems. Your best entries are going to be off the lows and highs, your key entry point. And when you get across, of course, there's probably a midline right through there. I don't have it on there, but you could drag it down and see it working across there. And you can see that's probably, there's your midpoint, and it's risky going long off a midpoint. It's a different animal, and you'll have more failures there. And so, again, this one probably should be green. I liked it, and I actually took this trade myself, so I marked it blue, but looking at it after the fact, it probably ought to be green. In fact, I'm going to change it. So it's borderline, but for the reasons I stated, it being in the middle, and you see what would happen if you took the short. But when you took, and the same thing could have happened to you on the long. There was enough room to get in there if you could get in. If you dropped a limit order in there, it would have filled it. At least it did on my chart. So I'm guessing it. And you may have a little different setup there. If you had a little lower, if you're trying to get back in right into these highs, definitely you got to skip it. So, but it turns back down here. But again, we're still in no man's land here, and you've seen it flip-flop 2 or 3 times. So I'm either going to wait for it to come back up here or down here, and or until we get something for sure going lower again. And so far, this support's held. So, and again, it's tempting to go short here on these negative bars, but look how we're going sideways again. It does pull back, give you a first entry long, then a second entry long bounce off this low, but I don't think you want to go short right into that. So let's wait and see if we get something. If this acts as resistance and we get another entry. And lo and behold, you get a new low here, you get a first entry short, pull back second entry short, and it's right off where you're looking for a trend line there. And if you drew this line off here, you could have drug it up. There's probably even a midline here. If you put it right in there, you can see there's a midline, but you don't really need it. So I like going short right there. That's right off the key entry point. It's right off the support resistance. It's now acting as resistance. It's off the EMA. I like that one. It does come back over and give you another chance to enter. I marked this one green, but it's borderline even being green because now you've already, I wouldn't enter here if I didn't enter here, but this is one of the ones I like to add on sometimes, but I don't even think I would add on here because it's so close to the lows, and this is the low of the day. And notice the resistance across there. If you drag your line down, it's risky entering there again. And so I marked it green because it is off that trend line. It is a key entry point. And notice that little gap right there. That helps you find, it doesn't really help you here, but it helps you find that midline right there because that gives you 2 swings off that right there. And if you bring it down, again, that helps you find this lower trend line a little bit early. But that's a little more advanced. But this turns out to be a great trade, but you don't know that ahead of time. So I think you got to skip that one. Like I said, I'll leave it green, but it's borderline. There's another second entry here, but you've got an overshoot right here, what looks like an overshoot. Maybe your line's here. And in that case, you don't necessarily have an overshoot, but your measured move coming down is right here, and you got to go short right into that. It would have worked, yeah, but you don't know that. And again, it's a midline. It's kind of the middle. You'd rather be entering over here. And then we finally come back and you get a break and you get a first entry, then you get a measured move up and you get a second entry and it fails instantly. I like that one for going long there. It is a trap. The only reason this one is green is, notice this, there's not enough room to get out between here and here. So if you entered this one, you had to use a limit order and you could have gotten filled 2 ticks back into that bar and you'd had enough room to get out, and it wouldn't have mattered, I don't think, either way, but you got to be careful entering there for that reason. Plus it looks like we may have already had a break of this little short-term one here, but you got to draw this trend line too, and we're still probably looking for it to go higher there. So, but the stipulation is you got to have room to get out. Otherwise, I'd skip that one too. Turns back down here. I wouldn't go short with this trend line working up here. Notice how it looks like it's going to bounce. It never does. It turns on down and it comes back down and it bounces right off of your measured move down. Gives you a bullish bar, and that's really a one leg down, a little correction, and it's two measured legs down. This is a fairly bullish bar. So I like entering here, hoping that you're going to catch, the low here. And this thing takes off, and at first I'm thinking, wow, I've caught the low, and this thing's going to go. But it comes, notice how it comes all the way back just enough to get all the break-even stops, and it takes off again. This market is so efficient, and there's no fooling people. This market, you think you're smarter than this market, but you just can't hardly hide from it. And that's why I like to exit and look for new entries again, because if you take, you take all that profit on a runner, and then it comes back to the tick almost and takes you out. And look, it actually goes enough to get any limit orders that people might have used in there, and then it reverses and takes off and never looks back again. But that's how efficient the ES is. But that's why I like trading it, because it's so predictable. It really is predictable. So you got a trend line working up, it tries to go higher, and then it just turns down. Actually, notice this channel, this trend line and this trend channel line, that's the first break of that. So you're looking for it to go higher and make a new high too. And then it makes a double top with a big bearish bar, a good bit away from the EMA. So I like entering that for a short. The only question on this one is, it is right here where this support resistance line is, and you got to go short kind of right into it. So it's something to be concerned about, but being that far away from the EMA, being an overshoot after a break, being a double top, being that bearish, there's a lot of reasons I like that. What I would recommend is let it break lower here and drop a limit order, maybe a tick or two, and you could have gotten filled way on back in that one, and the bottom just falls on out. And notice that you got this little channel working down, you get a break, first entry, and then you get a nice second entry short, and it comes back and tests that midline, that support resistance holds, gives you a bearish bar. Your stop actually has to go above this bar, because that's where the high is, but this is really the signal bar that sets this one up. If all you had was this one, it's too bullish, I wouldn't take it, but I like it here on the second entry. And you may come back down and make a new low, but when it bounces there where that trend line is drawn off those first two swings, you want to go long there. This one's a little risky. I will say, though, it's a little risky because this is really your signal bar, and it's not a very pretty bar. But again, you get this one here that's very bullish. So if you enter there, your stop has to go below the low of that bar. Okay, I had an interruption there, but yeah, this one you got to be a little careful with. You can notice all that support. It's like a little failed break lower. Let me put my line on there. I was trying to keep as many lines off today early because it was just really messy. But you can see the support right across there and the little failed break lower. But this has got to be your signal bar. It's really a first entry because you're making a new high, but it's like a little failed break lower. It confirms this trend line. It's coming back and doing a double test of the brown line, which was what I was looking at maybe being a midline. But it takes off, comes back, gives you a higher low. This is a better entry, this higher low. And go long right there. I really don't have my trend line quite in the right place there. And if you catch this one, if you catch this one, you won't catch a runner. If you catch this one, you probably catch a runner, and you ride this up all, the rest of the day. And then you just get a repeat pattern here. Look how this is very similar to here. You get the failed break lower. It sets the trend line on your two swings on the low side here. And of course, if you pull it up, you ought to see those two swings. You might have found it up here and pulled it down. That's a little bit more A little bit more difficult to find though. But notice that's two measured legs down as well. There's a failed second entry long there, but you're looking for prices to come up here anyway. And look at all that sideways stuff. So this is a little failed break lower. That's why I like that one. It's not a perfect signal bar, but you know, it's still that failed break lower. We're probably going to come back up, and we're probably headed at least to here. And of course, it gives you a higher low here. The only reason, notice what happens here. It actually goes lower below that bar first, and then turns and goes up the other side. I like entering there. The only thing I'll say on this one is when it broke higher, you're right at that double top. You're close to here, so make sure you let it back up and use a limit order enough to get in there if you want to enter on that one. And then, of course, it reaches up here, the high. You definitely should have had this channel by this point. It starts working down a little channel. You get an overshoot, bounces right off the trend line. It's actually a pullback to test the high of this range. Notice how when we shot through, we didn't test it. So this is the pullback to test it. Notice too that there's this possible midline right here that I thought was just the upper trend channel. It pulls back to test that twice too. So you're not only testing it twice, you're testing the trend line twice. Normally I would like to enter right here. You know, it's tempting to enter here, but I'd say skip this one. It is an overshoot. So you're probably, you know, and it's bouncing off the key entry point, it's bouncing off support, but it's just too neutral of a bar. But it pulls back here, and again, it gives you a more neutral to bearish bar, so I'm still a little scared of it. But when it makes this higher low here and gives you a failed second entry short, notice the new low, first entry, second entry, and bounces off that. And again, it went lower and turned and went out the upper side. Just go long right there. And that's a great setup. It's really confusing until you get the reversal right there. That's that reversal pattern. And off it goes. And then you get a trend working down, you get a break, you try to go lower twice, and it fails. So I like going long there. And then it gives you a little lower high here. The only reason this one's not blue is because we're back up to this upper trend line here, and there's not a lot of room there. Notice how it found resistance there before it pushed on through, and the key was we were headed up here for this measured move on the trading range. But you don't know that at this point, and you got to be real careful of this. So if you enter here, you got to have enough room to get out before you get to this double top here. And that's the reason that one's green. Otherwise, it would be blue. But you know, it's a really nice trap. It's really your failed second entry happens here, but it's like a double trap because it looks like it's going to be a failed second entry long, and it reverses. So, but you don't want to be going short on a trend that's this strong, especially when you're looking for prices to possibly come up here. What might have tripped some people up is that your measured move, I moved this a minute ago, on this two-tiered channel is that you've overshot it once and it's bouncing off of it, so that might fool people. But everything's still above the EMA. You just got to be real careful. You're better off to sit that out than to try to go short right there, because look how strong that trend is, and this is your measured move up here, and we aren't there yet. And so that's what it's trying to do. So even though it may not get through this line, it may just keep crawling up it until it gets up here. And then look what happens once it does get up there. Once it comes through this line, it pulls back and tests it 2 or 3 times, and then it gives it a second test before it goes lower. So that's that double test rule. And so always remember that rule. And because once you've tested something a couple of times, it's probably going the other way. So this was a little more difficult, probably. At least it feels that way because you had to be a little more advanced to find some of this stuff and know what's going on. Really, all you had to do was play it as a range and find your shorter term trend lines. That's the key to it, really. But this is a very busy chart, but there's some good trades in there today, especially on the reversal. If you caught some of these, you know, there's runners here, runner here, You would have had a runner here, but if you didn't exit, you'd have been in trouble. You'd have given it all back. So there's a runner here. Several runners today. So you only need to catch one runner really. If you can get to a couple of three trades and one runner, you can make some pretty good money every day. So you don't have to have 8 or 10 trades, which is what most people think. So, but anyway, I said this wasn't going to be a long video, and it's 25 minutes. So lots to talk about today, though. This was a good lesson, really, for a different kind of day. It's not the standard day we've had recently. So anyway, I'm going to wrap it up. We'll be back again to do it next time. This is Mac with price action. Oh, by the way, no chart lesson tomorrow, so we'll be back to do it Monday. This is Mac with priceactiontrading system.com, and we'll see you next time.